round, round, get around, I get around, yeah, get around.
So, Peter, lovely to see you today,
And you, Jeremy.
And thanks for agreeing to be our first industry expert in our new series of in-car interviews that I'll be running over the course of this summer. Go for a little drive and ask you a few questions about the market and market trends and so forth, and see what knowledge you can share, which might help some local buyers and potentially sellers in this quite difficult market. So, what are the current trends, Peter, in the market at the moment?
I think in the last 18 months we've seen quite a significant change to the type of person we're having coming into the office. And the first 18 months, it was principally first-time buyers who had aspirations to purchase properties which were too expensive and without sufficient in the way of either deposits or income to enable them to become house owners. Those for the first 18 months, then we know significantly since the beginning of this year, things have changed dramatically, and we now have a lot more positive approaches for people who actually have a right level of income, a good size deposits, able to start thinking of purchasing on the market where house prices have fallen significantly in the last 18 months. Whether those house prices have fallen sufficiently yet has yet to be seen. I don't think they have. We've seen falls of probably about 20%. I think they need to fall probably by another 15% before lenders are able to maximize their mortgage lending to match the asking prices of properties in Jersey.
Yeah. Okay, that's interesting. No, we've certainly seen a far busier first quarter compared to the last 9 months of 2023. It's been quite eyebrow raising, to be honest. And very quiet over Easter, but there seems to be a few more inquiries now. But we're doing a lot more valuations than we are viewings at the moment. Put it that way. And I think people are sitting tight and perhaps waiting for these prices to perhaps drop further. But it makes it difficult when you're valuing, because when you go to market with a property, people still think they can put in a considerably lower offer. Taking advice from the likes of yourselves, thinking for the 15% lower offer coming in. But what are you expecting prices to do over the next 6 to 12 months? And have you got any kind of longer term forecasts of,
in terms of property values, property prices?
Yeah.
Yeah, well, I'm neither a valuer nor an estate agent, so I'd rather not comment too much on that, other than the fact that the properties have to fall before the market can go back up to speed again.
Yeah,
they will have to fall. There's no discussion about that, I'm afraid.
So there's big affordability issues in the island right now. And are you finding there's any specific areas of the market where there's more activity or perhaps more value than others?
We've seen quite a lot of activity in the first-time buyers market. The very welcome news that Andium are offering people the opportunity of benefiting from either a 25 or a 40% deposit is great. It's encouraged a great deal of interest in people, but unfortunately, the system is totally insufficiently funded. There's only 10 million to put into it.
Yeah.
10 million sounds a lot of money, but when you start having to offer people a 25 or a 40% deposit equal to anything up to £250,000, that 10 million is whittled away very, very quickly indeed. And thus, I'm afraid, the announcement of this scheme has probably raised the expectations of people too much, and there's a lot of disappointment being suffered by people who find that they can't get onto the scheme because they might be able to pass the grade financially, but there simply aren't enough properties to go around for them to share. Now, if and when the states decide to debate this again, they're going to have to put in a claim to the central exchequer for an awful lot of money to be able to get the scheme off the ground for the future once the 10K is used up. I've always thought that the original States Loan Scheme, the Dwelling House Loan Fund, was a brilliant scheme. It didn't give you a deposit, but at least it gave you the opportunity of borrowing money and you were charged according to your financial circumstances between 3 and 10%. And it was means tested every year, and it worked very, very well indeed, and put many, many hundreds of people as property owners for the first time in their lives. So it worked very well. I've always wanted to see a scheme like that again, introduced to the island, because giving people deposits is all well and good, but it's putting many other potential home purchasers at a total disadvantage. And in a fair society, like we're supposed to be seeing in Jersey, giving some people a higher advantage than others is questionable, I think.
You mentioned the historic schemes, like build a blockage back in the 70s and so forth, and up to self-building. That could be another potential option for people. We've got nine approved affordable home sites, which I don't think have advanced in any shape or form. And probably quite a few landowners not knowing quite what to do next. So I'm just wondering if there's any possibility.
Well, self-build. I built my own house, self-built, using a state's loan scheme, and it worked very, very well indeed. But self-builds now, the principal stumbling block is that none of the mortgage providers in Jersey will fund stage payments for the construction of a house. That's simple and straightforward. It's been like that for years. So what we have to do is to go around the houses finding private funding for people to be able to raise over maybe a build period of 9, 12, 15 months. The interest rates are ridiculously high from the point of view of first-time buyers, and are usually about 9%. That's nowhere to start off with life in one's own property when you're having to rack up large debts like that. At the end of the practical completion of the property, then it's possible to get a conventional mortgage. And what we do, we do this in 2 tiers. We organise the first facility, the private funding, and then before we even press the go button, we ensure there's an escape strategy for people by us having already obtained approval in principle from a conventional lender. Yeah. So it works very well. That works very well. We have any number of these projects on the go at the present moment. We are running out of private funds to enable us to continue to offer this facility anymore. And this, therefore, sadly means that if there isn't money forthcoming, then all the banks change their attitudes, which they will not, I'm sure. Then it's going to cause significant delays in the expectations of any people who are lucky enough to be offered a site.
Yeah, except, I mean, we've been pushing, not through my estate agency, but through my business partner, Magda, on the modern methods of construction side and modular builds, modular housing, and we've had several meetings with the government. We've been across to Poland with numerous chief ministers and numerous housing ministers over the last couple of years, and whilst these houses are mortgageable all over Europe and have been for the last 30, 40 years, again, somebody has to fund the build, and of course we don't know if they're going to be mortgageable until the end of the build. Once they're insurable, they're then mortgageable, but no one's going to take that risk as a buyer that they're going to be borrowing at best part of 9% for the duration of the planning application, the build, and everything else, and not knowing whether it's mortgageable at the end is going to be a battle.
Well, we could talk all afternoon about this type of method of construction. Over the last 34 years since I opened the mortgage shop, I've received many inquiries from people wishing to build prefabs, or whatever you want to call them, or to buy existing timber constructed properties in the island. And there's been an awful lot of people who have been bitterly disappointed because it's not possible to obtain the funding. Following the very interesting, successful conference at the town hall 2 years ago, I did a lot of research with all the mortgage providers and was able to persuade 3 of them to consider taking on board this funding for this type of project. But every housing development that is funded by mortgage funding, the maximum that lenders are prepared, maximum exposure lenders will have, is 25%.
Yep.
So therefore, the scheme that I was trying to put together, we then get 3 lenders, and that didn't match expectations of anybody. I think there are lots of other problems as well. The method of construction, whilst being incredibly energy efficient and no doubt incredibly fire efficient as well, just scares the living daylights off an awful lot of people. And as a consequence, we've got one project on the go at the moment, which is a prefabricated or modular project, and the developer, the homeowner, has had to modify, the manufacturers, to modify the spec from an external cladding, which is timber and plastering, to conventional block and brick finish at much greater cost.
Yeah, interesting.
And that's the only way that he can get it off the ground. So,
yeah,
in the last 3 or 4 months, I've had about 5 inquiries from people wishing to build modular homes, and there's a couple on a site out at St Brelard, around Waynay, which have the plots are on offer for a very, very tempting amount. Planning have offered, I think, a consent for 1-bed units there, but you simply can't get the funding for them. And I'm afraid that what's happened in both cases there is that the owners, having been attracted by being able to buy the plot dirt cheap and maybe put a £150,000, £185,000 construction on the site, they've gone ahead and done it using family funds or savings or whatever. They won't get a mortgage. That's all and good so long as they continue to occupy those properties. But in 20 years' time, if they want to sell them, but they're still unmortgageable, what do they do with them then?
Exactly.
So there are an awful lot of peripheral issues which need to be addressed, and sadly, as with any organisation, but the states of Jersey or in a property in a place like Jersey, those decisions are sometimes put at the bottom of the pile because there's more important things to be discussing, I think.
Yeah, myself and Magda certainly won't give up, and watch this space is what I can say. But blood, sweat, and tears. We'll see what we can do. See lots of news regarding interest rates and what's going to happen next. How are interest rates trending, and what impact do you expect this to have on mortgage affordability over the coming year and beyond?
Well, the general public is very influenced by what they read in newspapers and hear in the media, and there's been a significant amount of conjecture in the media for the last 7, 8, 9 months that rates were going to start falling. Unfortunately, that conjecture is not always based upon sensible dissemination of figures. Sometimes it's just been put up by reporters who don't really have an understanding of the economics of the situation, and this unfortunately has tended to be picked up by many people. And so the expectation towards the end of last year was that rates were going to be falling, and that, I think, was one of the reasons why we saw such a surge in activity since the beginning of January. Now, the media continue to suggest that rates are going to start falling around about now. And then about 4 weeks ago, economists started putting out the news that it's unlikely Bank of England were going to be reducing base rates. And this eventually filtered its way through. And now this may well be the reason why in May we're seeing a significant reduction in inquiries from people. However, Bank of England are being very bullish about this. They are now actually saying, from the Monetary Policy Committee themselves, that they expect the markets to be in a position where they can perhaps suggest a reduction in base rate by September. And if that's the case, then we might see perhaps a couple of reductions of 0.25% each during the next 6 months. This will have a significant effect on the market and will encourage many people, I think, to start coming to you and coming to us again.
Let's hope so. What advice would you offer to first-time buyers who are looking to perhaps get their foot on the ladder in the next 6 to 12 months? Or obviously they need to be looking.
My advice is don't rush things. Mm-hmm. Just because they might have 1 or 2 friends or relatives who have been fortunate enough to purchase. Many of them use the bank of mum and dad, substantial funds, parents, grandparents, aunts and uncles are giving out to first-time buyers, but not everybody has the advantage or the good fortune to be benefiting from that. And therefore, anybody looking for a 10% deposit mortgage, even a 5% deposit mortgage, is probably going to be very, very disappointed unless they have a significant income. Now, I think we need to just focus on the loan to values for a second. A 95% mortgage at the present moment is very expensive, available from 3 different lenders. Unfortunately, I'm not prepared to do 95% mortgages because I think they're wrong, because all we need is even a modest drop in the housing market in Jersey, and those people who've just purchased their 95% mortgage will immediately fall into negative equity.
Yeah.
And they won't be able to sell their properties because obviously they have more debts outstanding than the value of the properties. So it's not a good idea, I don't think.
Mm-hmm.
We're seeing many people in their 30s, 40s as first-time buyers, and they have been able to save incredibly large amounts of cash. I remember we had to have one couple who were in very poorly remunerated jobs. They're both in the mid-40s. They had 2 children, and they had been able to save £129,000, which, based on their incomes, was a remarkable achievement. And we get any number of people like that who come through the doors with significant savings, and many, all they need to do is for one out of the 2 partners, husband, wife, whatever, to put aside all their salary for 2 years. Before you know what you've got 80 or 90,000 pounds, which goes a significant way towards putting a deposit down, covering legal fees and so on. Unfortunately, Jersey is a place where people like to eat, drink, take holidays, buy expensive cars, so on and so forth.
And lots of credit, unfortunately.
Yeah. And so those are the people who have to give themselves a severe talking to, I think, before they even think of jumping on the property ladder.
Yeah, and lifestyle changes which don't come easy when, for youngsters, and so we all like to have fun growing up, and but if everyone needs to buckle down. Well, everyone needs to buckle down, but anyone with aspirations of getting on the ladder anytime soon has just got to cut off their spending, haven't they? And how do lenders assess affordability for mortgages generally?
Well, it used to be dead easy. We just look at a file up to 2 years ago and say, well, you're a 5 times multiple of 5.5, 6 times, maybe even greater than that. But with the advent of much higher base rates, income multiples went completely out the window with every one of the mortgage providers about 2 years ago, and they have now replaced these with a complex formula which takes into account risk and potential risk. And so rather than just underwriting a mortgage at the going rate of, say, 5.19%, what the lenders are in fact doing is say, well, okay, let's have the funds at that level, but you're going to be able to prove to us, though, that if rates bounce up to 8.5%, 11.4%, you can still afford them on your salary. And this is the reason why so many mortgage applications have failed at the first post, because of this stringent criteria. So what we do now, when we see somebody, we take all the details we can. We will do a personal assessment of what sort of income multiple we think we can give them an idea of what that's going to cost, and then, armed with a few basic bits of personal financial information, we then go and knock on the doors of all the 9 mortgage providers. It's a tedious task. It's the only way we can get any accuracy and certainty out of the thing. Fortunately, because we've been around a long time, we know most of the underwriters, decision makers and so on. We have access to their underwriting systems on our own systems, so we're able to give, within 3 or 4 days, potential inquiries, a very accurate idea of what they should be able to borrow. So that's how it works now. Tedious, it's long-winded, it's effective.
Okay. And what key factors should buyers prepare for when they're applying for a mortgage? How should they best prepare themselves, apart from cutting spending and clearing credit cards? And
well, the majority of people we see now don't have credit cards.
Okay.
A credit card is perhaps one in every 15 applications or inquiries. Finance hire purchase personal loans can't exist. The whole thing has changed dramatically. And in reality, what we tell people now is that if they want to buy a house, they have to accept that expensive holidays have gone out the window. Hey, what's wrong with Jersey beaches and cliffs? That expensive cars go out the window, and eating out, putting a new kitchen or bathroom in their place, all that needs to be put on the back burner and just focusing on one thing, and that is paying the mortgage. And that there's been a sea change, certainly, since the end of last year, where the people we're seeing now have acknowledged this fact and are starting to accept that they're going to be having to spend probably 3 times more on their mortgage than they would have done a couple of years ago. When you sell, you've got agents' fees, you've got your lawyers' fees, and you have any fees imposed by your current mortgage provider to repay the mortgage debt and to cancel an existing fixed rate. And those fixed rate penalties can be very expensive, ending up to 5% of the total value of the borrowing.
Understood.
There's also a £100 fee to just cancel the mortgage debt through the royal court. So you've got 4 sets of fees there. Then when you're buying, you've got your agent's fees. You've got correction. When you're buying, you've got your legal fees once again. They probably work out at about 0.5% for selling and for buying. Got a valuation, which is quite expensive these days, although fortunately several lenders acknowledge the cost of the valuation and will absorb that cost themselves, which is great. Not all will do that. Then you have, apart from the legal fees, you've got search letters, which are about £460. They're written by your lawyer to make sure that all the main services are in place, that your property doesn't lie in the path of road widening scheme or so will lie in the shadow of a new hospital development or something. Yes. You've got stamp duty. You pay stamp duty on the purchase and on the mortgage. Now, the government in January this year increased the ceiling for first-time buyers who are benefiting from stamp duty reductions from 500,000 to 700,000, and this helps significantly. But it's still, if you are no longer eligible as a first-time buyer, then you've got to acknowledge that you're going to be spending an awful lot of money on stamp duty. Then moving to the mortgage, you've got a lender's booking fee, which you pay at the time the property's being valued. Mortgage shops charge an admin fee. You'll be expected to pay the lender's legal fees. Usually your lawyer, because you're paying him quite a realistic fee, he will usually absorb the costs of setting up the mortgage, which is a separate issue to organising the transfer of title. And then you've got peripheral costs, direct debit, standing transfer costs of the funds and things like that. And this can amount to a significant amount. And frequently, now that there's more activity in the market, we're seeing sums of in excess of £100,000 which people have to fines.
And for current homeowners, what options are there available for refinancing? I mean, are there any benefits that might be out there?
Yes, there are significant benefits. Unfortunately, the last couple of years, some people have sourced mortgages which have become cripplingly high with interest rates, which have been put up by the lenders. And upon receiving an invitation to renew or review their interest rate when a fixed option comes up for review, that's the time when many people come see us and we are able to not substantially reduce the cost of their borrowings, of their monthly payments. At least we're able to get the very, very best rates for them, which will effectively show a quite a significant saving. Costs between £3,000 and £4,000 to do that. So you've got to go through all the process of applying for a mortgage again, but it's frequently worth doing.
Okay.
And if one can show a saving of, for example, lender X, they're offering a rate renewal of X, but lender B upon remortgaging can show a reduction of the figure at a much greater level. So it does work very effectively indeed.
And how long would you propose that people start looking into this if it's something they're considering before
lenders will usually notify you, give you about 3 months' notice if you're lucky. And what I'm telling everybody at the present moment is come and talk to us or talk to your lenders, but do not make a decision in respect of choosing a specific rate or product until the very last moment. Because the next few months are crucial, I think, and with what we were discussing earlier about the possibility of rates falling, there's no point in putting a name to a rate at 5.25% now, when in the 3 or 4 months' time, you might be able to get it for 3.5 or something like that, 4.5, something like that.
Of course. And just going back to stamp duty and the 3% levy on second homes, do you think we've now seen the end of the buy-to-let market?
Well, there's an expression which I tend to use in respect of the buy-to-let market, but I don't really want to say it here. On both sides of the channel, UK and in Jersey, the buy-to-let market seems to have failed completely. And there's this unfortunately, the states or the government have not thought through the implications of this, because what they're in fact doing, they are denying many people the opportunity of being able to rent in the private sector. And what's going to happen is they're going to be throwing themselves on the mercy of the government to provide them with a roof over their head. And this is the implications from the taxpayer's point of view are going to be horrific. I think it's such a bad mistake that's been made.
And with all this new legislation,
and then the condition reports and putting ceilings on rent increases and actual rents being charged, I think is probably quite necessary in a minority of cases. But having seen many landlords we've set up with mortgages and property portfolios in the past, and having been a landlord myself, I realise that if you treat people properly, then the needs for this legislation is completely unnecessary.
Yeah, no, we're seeing quite a few landlords leaving the market if they can offload their stock.
Well, that's the trouble, yes.
Yeah, and we've seen rents soften recently, but one can only assume that rents could dramatically increase with a smaller pool of buy-to-let properties in the island.
Well, supply and demand is the defining feature, isn't it?
Yeah, absolutely. Is there anything particular you would like to discuss, Peter, or anything which you can share with any of our viewers about what you guys are up to in your new offices, which you've kindly shown me around earlier today?
Well, I comment on the area we're driving through at the present moment. Looks like a World War III zone at the present moment, but goodness sake, a lot of money is being spent on providing accommodation for the population around here. It's great. Unfortunately, Tkedville Court was one of the earlier high-rise blocks, and has already been flattened. One should see a greater life expectancy in properties, I think. Cyril Markham House is another classic example. And developers and planners should get things right from the start, rather than just putting in something which is really just a temporary accommodation. So back to what you were saying. I don't think we will ever see the market return to the high levels of activity which I've seen over the last 34 long but very happy years. Now, I remember a few years ago where we were handling 75 appointments a week. And if we were advertising, we had to actually cancel advertising because we could not offer the sort of service which our potential clients were wanting. Yeah. It's quite a story. That's gone. I think it's gone forever, probably. So I don't ever see the property market getting up to the same level of speed as it did before. I really don't. And possibly with a diminishing population, a diminishing property owning population. But then again, we get back to landlords and all the people who are being brought into the island to help specifically in the hospitality industry, finance and so on. They're going to be provided with roofs over their heads, so perhaps it's really going to be incumbent upon landlords to do that rather than individuals finding a flat to rent themselves.
Yeah, but no, we've
I know landlords like hotels do that already. They have blocks all over the place which they use, and which apparently is still not sufficient.
no, we only started. We introduced rentals as a service offering at the Rossignol Estates last summer, and it's brought in some income for us, and in the absence of any sales. But we're seeing a dramatic increase in registrations for non-qualified or registered properties, and they're as we know, they're like hen's teeth. And I don't know how we're going to continue to attract top personnel and the trades and hospitality. I struggle to see where people are going to be accommodated, and gone are our days as a tourist haven. It's not the same place we grew up, Peter.
No, it's still a fabulous place to live, though. I have both my daughters and their lovely husbands over here. We've got 5 grandchildren, and they are all flourishing.
Good.
Absolutely flourishing. Good. And the people who I meet, fortunately there's not too many of them these days, who say, ask them what they did over the weekend. Oh, we stayed in bed all day watching television because there's nothing to do. I'm so bored living in Jersey. And I feel like tearing their heads off the show. There's so much to do in the island. Getting onto the brain drain or the youth drain, it is claimed that many people are now leaving the island because they can't get employment or they can't find accommodation. Young local people. Well, in reality, that's always happened. Going back centuries, it's always happened. In fact, at one stage in the 1700s, the government of the day was paying people to leave the island because there wasn't sufficient food to be able to feed them, and so it goes on. And what in reality is happening at this moment is that I see so many people in their late 30s, early 40s, who are Jersey people who've gone away, got a good qualification in finance or law, whatever, found a partner, got married or whatever, produced a little family, and then in their late 30s, early 40s, they're returning to the island with all their expertise. They're coming back, and they're providing a huge beneficial addition, I think, to the island's economy by doing so. So many people leave, of course they do, but many of them come back as well. So I think there should be less emphasis on that.
Yeah, I tried leaving 25 years ago when I left finance, and home's home. I came back, and it's been our home for 1,200 years on my mum's side, 1,400 years on my dad's side. But
stop boasting.
Whether we'll be here for forever is another story. But as you know yourself, I've had a good spin down in Spain when I got into sales down there, and we've got a few ideas up our sleeve. But we've got a young daughter in school now, and we won't be going anywhere for 5 years at least. But home's home. It's a shame to see people leaving, but a trend we're seeing now is, particularly among, a couple of years ago, I would say before COVID, one in 5 house valuations was a divorce or a separation, whereas 1 in 5 these days people getting valuations or appraisals in view to potentially leaving the island. It's a stark contrast to what it was pre-COVID. And everyone seems to be a lot more tolerable of each other post-COVID. In their relationships. So very, very, very few hit in the market for that reason, which is...
It's a high number, isn't it? Which just described.
Yeah, very, very much so. But 53 odd state agencies in the island, makes my life and other agents' life increasingly more difficult. But
I'm surprised that number of estate agents have been able to survive in the last 2 years of.
I think a lot have left the industry. Yeah, I think there's the same number of agencies out there. There's
with fewer negotiators, presumably.
Far fewer negotiators who've had to go and find full-time paid jobs to support their families and support their mortgages or their rental commitments. Otherwise, if you've got no income, you can't live.
Yes.
But we've all had to, tighten our belts. And our braces to, keep ourselves going and look at where savings can be made. But, it's difficult. Yeah. It is difficult, but it's a tough gig, but, we're there for the duration, hey, Peter. But,
yes,
retirement is probably not as soon as, either of us would like.